What's up, investors? So I have a great show for you today. We're going to be doing a similar video to what we did previously, the last video that I did, where we're just going to focus on some technical analysis on three more semiconductor stocks. So today we're going to cover TSM, which is Taiwan Semiconductor Manufacturing, ASML, which is Advanced Semiconductor Machine Lithography, and then there's Qualcomm. These I would consider my type 1A type stocks. TSM and ASML, they're definitely in top tier category. Qualcomm, they're more of like a tier 2 in my opinion, but I'm incorporating them in this video for AI purposes, and we'll touch base on that once we get into them. So two of those stocks are new, TSM and Qualcomm. Also, I have chapters in the description, so if you want to just jump to a certain stock, you can do that also. But yeah, let's just jump right into it. TSM, we're just going to start from scratch, currently at about 120. And right now we're looking at a weekly chart. This dates back to mid 2019, just for reference. And so let's just kind of start drawing some lines in here. See what we see. It looks like right around this mark, I would say right around 107, there seems to be some resistance. I also like this line right about here. It looks like we have some heavy consolidation between 107 and 127, and currently selling at 120, so we're like right smack in the middle of that. We'll also put a thin line here at these peaks, because we've hit this ceiling, this cap on the market twice, it looks like. Right about 142, it looks like we've touched on that twice. Let's make this one, I guess, a little thicker, and this one also. So I guess at this point I would say 107, 110, that'd be a decent time to buy. This one has been trading sideways for a little over a year. So it starts right here, right at the end of 2020, early 2021. It's been trading sideways for a while. We had this nice uptrend. So we'll just draw that line, and I'm not going to be too particular here. But we had that uptrend, and that started right around March of 2020. Like, whoever was on this trend, and we're going to skip to the other stocks too. I'm actually going to just kind of show you. So here's ASML real quick. So this is a stock that we've already touched on in a previous video. That's why some lines are already drawn, but we're just going to update a little bit. You can see right here, once again, that uptrend starts right in March of 2020. And then here's Qualcomm, just a quick preview. Once again, March of 2020, very steep climb for all three of these. So let's just go back to TSM. Let's kind of finish on this little chart here. So it looks like, right in 2020, TSM. So by the way, TSM, they're like a foundry company. They basically produce the chips and sell them to NVIDIA, AMD, multiple suppliers such as that, but those are like the big ones. And they honestly, I'm pretty sure they even provide for Qualcomm. So they're important in my eyes. That's why I count them as a tier 1A type stock. But it seems like we have some decent consolidation. I also have their Yahoo Finance page up here. Currently trading at a PE ratio of about 29. So we'll just keep an eye on that. I guess that seems to be the fair value. And I'm just basing that on the fact that it's been trading sideways for so long. We'll have to dig into the revenue or their financial statements to kind of get an understanding of how's their revenue growing. But overall, I guess in terms of buying position wise, probably like 110. That I feel like that's probably a safe bet. Otherwise, yeah, I mean, this range seems to be like the fair range. So if you can get them before they pop in the next, who knows when they're going to pop again. I guess the other concerning thing that I've seen is, China's thinking about like retaking over Taiwan. It's debatable if as far as like, has China always been the leader of Taiwan? I guess it's all depends on who you ask. But yeah, that's kind of, this one was pretty easy. It seems like it's right in that fair range. I would say look for it to drop a little lower. Otherwise, this is kind of like a hold position for me, in my opinion. I'm not really looking to enter this. I don't own any shares of this, but I'd like to. Um, I'd be looking for it to come back a little bit. If it goes above 127, it could easily trace back up to 142. But I would be looking for this one to come back a little bit more, come back to like 110, 107, because it seems like we have some strong support here. Once again, this dates back to the end of 2020. So we've had a full year of just sideways consolidation here. So this seems like a fair value. We'll pull up their thing one more time. This is a dividend play too. You're going to get 1.66% in dividends. There's also a one-year target of 160. So other things to keep in mind. But otherwise, let's now move on to ASML. This company, I think when we did the setup of this, the initial lines, that was probably about 2 weeks ago now. So that kind of showed. So if anything, it's really just this new red and green line has been added. So it looks like based on what we had, I'm going to make this one line down here a little bit lighter, just because it was just like another support line. Not much support, to be honest, but a couple weeks worth. So I drew one in there just, as a backup play. But we'll zoom in a little bit here. This one seems to be trending down. So this is all of 2021, by the way. 2021 starts right here, and we had this nice uptrend. We can even move this around a little bit. I just kind of, like I said, I'm not being too particular here, but depending on how you look at it, that's the uptrend. A little bit of sideways consolidation here, and right now we're in a downtrend. So it looks like we're at least in one of these gaps between 601, 670, currently trading at 650. I'm pretty sure I bought some of this right at the beginning of the week, right around like 2 weeks ago. Right around like 6:30. I thought that was a decent opportunity. Let's look at their Yahoo Finance real quick. So this one's trading a little bit richer, 39 PE. This is also a dividend play. You're going to get about 1%. One-year target of 866. That's really good. So let's just jump back to their overall stock trend. We could even draw in a very light downtrend here. I would say that's fair. Will that persist? We'll kind of wait and see. I would say at this point, a decent opportunity, or at least one decent opportunity, would be 601. We do have a little bit of support between 520 and 601. So if you bought at 601 and it kept dropping down, a next decent level of support would be 520. Or of course, it could hit 601. You buy and it might shoot back up to that 670 range. If it can surpass that, heck, it could go all the way back up to 900, and that's when we're booming again. So we'll kind of see. So ASML, once again, as far as the chips are concerned, they actually make essentially like the printers for the chips. They sell these machines that cost literally $150 million for someone to buy. And who buys them? TSM buys them. This ASML, they own 86% of market share in terms of selling these lithography devices. And they're the only company that sells this one particular type of lithography called EUV. And it's basically the most advanced type of chip printing. And it just makes the device extra, what's the word? It just makes it better. Kind of losing my mind here. But yeah, overall, this one's in a downtrend, so it's up to you if you'd want to buy it. I would say my next opportunity would be anywhere around 600, 600, 610, 615, somewhere in that. That's a decent time to buy. So yeah, let's just move on to Qualcomm. So Qualcomm, I would say this one is kind of like I would honestly put this as like a B tier company, but I'm including it because I just believe that the next trend to get behind is going to be artificial intelligence. And yes, so all these semiconductors, they're going to have some sort of influence on artificial intelligence. I know NVIDIA is definitely going to be a part of it. And like, I'm not, I'm going to say the sad thing, but it's not the sad thing. It's just like the realization is AI is going to be probably largely controlled by the bigger companies such as the Facebooks, the Googles, Microsoft, Apple, those bigger companies that are already like well established. They're going to infiltrate that new market very quickly. But Qualcomm is also going to be in that market, or at least is starting to develop products for that market. And so because their overall market cap is fairly low, I want to say it's like, gosh, I want to say it's between 50 and 100 billion. I know that doesn't sound like it's small, but relative to like Apple, which is $1 trillion, it's small. And it just happens to have overlap with semiconductors. And so that's why I'm putting them in this list, even though I do consider them today as like a B tier type company. But because of AI, and I saw this article that basically said AI today is worth about $50 billion, and probably in the next like 5-6 years it's going to be about $350 billion. So the point of telling you that is, if Qualcomm can get in that market and say take even 10%, they're going to add $30 billion to their revenue. And for a company that's currently worth about $50 billion to tack on an extra $30 billion, this company is going to explode very quick. And so it's just, when do you want to buy in? Let's pull up their Yahoo Finance page real quick. So once again, another dividend stock, very nice to make money as you kind of grow. You're going to get 1.62% each quarter. PE ratio is 20, so this is the cheapest of the bunch. Current 1-year estimate is 217. I'm not sure who's creating that target. Some sort of analysts are. But once again, that's a healthy target. And that PE ratio, 20, I would say this is pretty fair. We'll kind of keep track of that as we move along. But so I've just drawn in a couple lines here. It looks like, once again, just like the other companies, we'll draw this trend line in here. Right around March of 2020, it shot up. Had this nice little trend line in here. We'll make that a little thicker for us. So that was clear. And then it hit its peak right around 160. And that's currently right around where it is today, 167 to be exact. And then it came down, chopped sideways between 123 and 150. And then all of a sudden, I have to imagine earnings came out. They must have beat it very well back in November, and it shot back up to its max. And not only did it shoot up to that former cap of 160, it went through it by another close to $20. Now it's had peaks of 193, and that's why I have the bar there. We could even lower this, just because it's hit that. It's more solidified, I would say, down here at 187, but we'll just round it to 190, just for convenience sake. So right now it looks like, at least for the past, I would say 3-ish months, we've just been a little bit of consolidation here between 163 and 187, so that $20 range, and right now we're at the bottom of that range. So the question is it going to drop down? And if it does, there's truly not that much support between 163 and 150. So I don't know if I would really buy here. This one, like I said, there's 3 months of consolidation here. Is that enough to really step in at this point? Will it bounce back? I don't know. I haven't followed them enough like I have with AMD and the Intels, but if you're bullish on them, you think they're going to be a good stock, this would be a decent time to buy because they'll bounce back up. Otherwise, if they drop through 163, very likely that they're going to go to 151, and possibly all the way back down to 123. If they were to drop all the way to 123, I would say this is an easy buy. You definitely want to buy them. 123, I would imagine their PE ratio, which is right around 20 today, it would probably drop to like 16 or something. So you would want to definitely jump on that because 20 seems like a fair number, especially just for the market in general. Once again, we have to consider the market in general is kind of in a very fluctuating environment at this point. A lot of things going on with the interest rates, possible war with Russia and Ukraine. So just some other things to keep in mind. But just focusing on this stock and its performance, this seems like a decent time to buy. But once again, I would be looking forward it to drop closer to that 150 range. That would be my personal choice to buy. And even 150 would I'd be hesitant on just because if it dropped below 150, it could easily drop down to 123 just because we don't have much. I mean, I don't know. I really could go either way. We do have decent support here. It's just this one green candle here that kind of is throwing me off. But overall, definitely 123 is definitely a buy. So like 130, somewhere closer to 123 is a solid buy. Now would be, I don't know, I'm on the fence about it. I feel like there's other opportunities that I'd be interested in. 150, it kind of makes me even more nervous, but yeah, I probably wouldn't buy this one right now. It just makes me a little nervous. I'd want to see this consolidate a little more, but if this one does rebound, over the next week or two and kind of stays above that line, it has been tested there, so we'll see. We'll see. It's been tested there twice and bounced back up. I'd like to see another couple weeks, see how firm that is. It seems to be holding firm. Yeah, just my opinion. I would need to know a little bit more about them. I know they beat earnings this past quarter, so that's promising. But that's just my take on it. So I guess overall, I would say, starting back from the beginning, like just to wrap up, TSM, I would wait for this to pull back, maybe like close to 110. But overall, I would say this is decent. It's sideways consolidating, and I'm sure it's going to pop at some point. ASML, I would say this one is pretty decent. I personally would hope for it to be closer to 600, more like 620 or less would be a great opportunity to buy. Right now, it's right in that middle where it's like, if you want it, I think it's a great long-term play no matter what. It's just, could there be a better chance, a better opportunity to buy? And this stock's not very cheap. It's over $600, so I'd probably wait just to see what happens. But once again, it's a great long-term play. Same with TSM. And then Qualcomm, same thing here. Now would be, sure, it's a decent opportunity because it's right at one of those resistance lines. Chances are it will bounce back, or at least stay steady at that line. So I think now would be a decent time to buy. I'm just a little worried that it could drop and pull back all the way to 150. And if it pulls back to 150, it could easily pull back to 125, which, for us, that just means more opportunities to buy. So you know what? If out of any of them, I would say Qualcomm might actually be the best opportunity to buy if you're thinking short term. But in terms of like long term, say 3 or 4 years, I would say ASML, just because they own so much of the market share. So that pretty much wraps up this video. I hope you enjoyed it. Please like, subscribe. If you want me to do other semiconductor stocks, I'd be more than happy to do it. I do have others on my list that I'd like to cover. But yeah, leave a comment if you want me to do that. There's also a link in the description for a Webull account if you don't have one already. This technical analysis portion, it's being done on Webull right now. So if you don't have an account and you'd like to open one, there's a link that will give you 2 free stocks in the description. And that pretty much wraps it up. So I hope you enjoyed this video, and I will see you on the next one. Bye, guys.